you railroad tracks. Retrace 140 pips in case you were bored. They don't have unlimited equity. They must grab it back at some point in the cycle. Now, we'll talk about the continuation, but they can make a W and continue on the uptrend over here. They book a profit, get back into direction. Why? They have longer term goals that they have to be cognizant of. If you think about this, if they went 3 days up, 3 days down, the market would never go anywhere. It would sit there sideways, right? And surely you'd figure it out. I know Craig would, because he almost figured this out. Now, if you notice that trade, 150 pip retracement, 2 pins to the mayonnaise. If they put the second leg in at the mayonnaise, there's your stop hunt low, hold the mayo at the U.S. session in the red box. There's your retracement trade. These things repeat over and over and over again, and you're going to see them in the charts. And once you see them, you can't unsee them. They're in there. Okay? Good stuff. Hang in there. I know you guys are getting tired. A few more minutes. 10:30-ish. I don't want to beat you up too long. Okay. Now, here's the thing that's going to piss you off. This pisses me off. You know your support and resistance bullshit stuff you've been drawing on the chart? It's a hoax. It's a hoax. The consolidation zones created during these moves intraday create false support and resistance level that the market maker puts that's visible on the chart. Understand what I just said. The consolidation zones that he makes on the chart creates false support and resistance because he knows all the retail traders draw the lines on this shit. So right now, here's the pattern, right? Think for a minute. I drew this for you, I showed you this. I push down, I show you this. Push down, I show you this. Right? This crap right here ensures that some retail guy is going to draw a line through it and say, that's support from February or August 2nd, 2011, and that should hold sometime in the future. He creates those zones to make you draw the lines. Hey, Joe, nice to see you. I'll get to you. I miss your coffee, buddy. Thanks for the nice email yesterday, by the way, to us and Compass. Okay, now, to sum this up a little bit. Level 1 and Level 3 aggressive moves will be seen. Market makers must book a profit and do so at Level 1 and 3. Level 1 can be previous Level 3. 3 levels of rise, they go into stop hunt, hit stops high, drop. That's your Level 1, your new peak formation. Level 3 becomes the reversal and starts Level 1. I know it's confusing, but think for a minute. If I have a trade that goes down 3 levels, 1, 2, 3, hit the stops one more time and rise, this becomes the new direction, right? Level 3 has now become Level 1, 2, and 3. Understand? If they're going to continue the reversal, or they're going to continue the uptrend after they make the retracement, this becomes the reset and you start the count over. We'll talk about this stuff. I just want to expose you to it. Okay? Let me flick the chart and get rid of my drawing and come back. Okay, so now, something kind of interesting. The head and shoulders pattern develops in Level 3 most often. Think about what the head and shoulders pattern is. Hit the high, pull back. Hit the stops, pull back. Hit the stops one more time. Sorry about your luck. Just kidding. Shoulder, head, shoulder. The difference is between us and everybody else in the retail world, they want you to take that pattern at the neckline. It's over at the neckline. I want you to learn to grab it here or here. Okay? I'm going to talk about it more, don't worry. Here's what I mean. 3 levels of drop going into the next day. Right? Here's the M formation. Nice drop. Consolidation. False support and resistance on the chart. False support and resistance on the chart. This lines up with some crap you'll project down here when you feel good. They come in, spike the low. Asian session. Shoulder. They pull back aggressively. They come in, spike past the low to pick up the pendings. Breakout guys. Snatch the market away from you. Hit the stops of anybody that was correct in this aggregate. Anybody that didn't move to break even, anybody that went to break even gets scratched out on the second pass. Either one of these is an acceptable shoulder, here or here, okay? Railroad tracks going into the session. But isn't the head and shoulder pattern, let me toggle this. Isn't the head and shoulder pattern a variation on a W? Ends on an M? Think. Forget about it. Amputate this guy's shoulder. We don't need it. Get rid of it. There's your spike to the low. Second pass. W formation. Take. You're in. Right here. Bam. The third try coming back doesn't take out either one of these levels. Trade is still good. Okay? So, this behavior exhibits level 3. Do not enter the trade after the dang neckline's broken. You're missing the whole thing. The move is in here or in here. Okay? Again, there you go. Level 3 behavior. Why? Because what they do is they're showing you a downtrend, right? Averages are separated. The 50's past the 200. Water is below the mayonnaise. The 50 EMA is trading below the jar of mayonnaise, the mayonnaise, white, okay? Now, that's a retail trader's downtrend. What do you do as a retail trader? Buy the rallies. I'm sorry, sell the rallies in the downtrend. Sell here, sell here, right? But what's really happened is they've made the aggressive move towards level 3, issued a hammer, formed the low, come back, spike to that low, but don't take it out. There's your proper entry on the head and shoulders. And there's your straight run up. Do not go against the market maker setup. Trade in line with him. Okay, you can trade both ways on level 3, but that's more advanced. I'll talk about it later. I want you just to get the basic concepts right now. The bias should be changed from a downtrend after 3 levels of drop. Head and shoulders is seen. But look, just think about what this is. Draw this box right here. Took it out for you to see it. Hold on, let me start over. Draw the box right here, okay? At the session open, they pick up the breakout guys, spike them out long, spike them low short, break plus a close, you enter here short. Gotcha, just kidding. Our group enters here. Okay? And in 3 bars, you're up big. Because this is usually a 50 pip channel. 50 pip Tokyo channel, right? They already, 1 bar is shifted off the low, 50. This next bar is about 50 right here. Then they chop around a little bit, hit it again. 50. There's your ADR. You understand? Okay. Never trade against the peak formation out of level 1 consolidation. That's the day the breakout traders are rewarded. The straightaway develops here most often. Market makers have gotten what they need at the head and shoulders, the aggressive moves, and the traders are jammed going into tomorrow. Trapped. They will not come back to the level because if they do, it releases all that money back into their accounts of the traders. Understand? By repeating back towards the level, they allow the traders that click out at +1, +5, -2, -3. They're not in the business of letting people out. They're in the business of jamming people. So understanding that keeps you in the right directional bias. WVVM, MAAW. Okay, my throat's starting to hurt. Don't confuse the 3 swipes at the stop loss, the vector 3 candles. Don't confuse the 3 pushes or pulses to the stop loss levels with the 3 levels of rise or correction. Some people are like, I understand. The 3 levels or 3 swipes at the stops are like this. They're tight and they're bursts. And I'm going to cover that tomorrow. But then you have the 3 levels of move of approximately 50 pips each, depending on the pair. Australians like 35 pips each. Okay? Whitney, you know this stuff. I don't understand what you're asking me. Okay, now, we're going to end on this next couple of slides. Once you understand how the market is structured, there's only 4 trades that you should be looking for. These trades are 90% accurate and will not fail. I know publicly I can't say that because people think I'm absolutely insane. But I promise you, when you delve into the forum and start looking around at the family, you're going to see Carr, Kim, Granny, Scott, Alan Black, Rick. Their numbers are sick. Dave McCoy now, Zen and Diane. 7 out of 8 for the week, 5 out of 5, 4 out of 5 for the week with a net profit of 10 grand. These numbers are unheard of in this business because people are following the basic retail technicals and they're scared when I say that shit. They think I'm crazy. Well, I'm not crazy. I revealed it today. Okay, so now, mastering the handful of setups that I'm going to teach you in here will ensure your success rate. Tommy just posted he was 87.5% for his first week. Fantastic. These setups are going to ensure your success and produce returns and win rates that are unprecedented in this crazy business. I promise you that. Okay, here's the trades. Stop hunt high M formation, stop hunt low W formation, straightaway rise, straightaway drop. The cycle. That's it. Too simple, right? You need some like dots on there and shit. You need some BBs, MACDs. What the hell? It's too easy. If you take all the crap off your chart that I put on there for you, by the way, and just look at the price action, what they're doing, you're going to start to see the drawings that I've drawn for you. I talk about that stupid picture that was out, I don't know, I think I was in my 20s, it was a long time ago. You know, there was like flying saucers and dinosaurs and there's a bunch of dots. And you stare at it, you can't see shit. You're like, what the hell's that stupid dot painting somebody made? Something happens after you blink looking at it for a few minutes. You blink, and all of a sudden the picture opens up, and you can see flying saucers, dinosaurs, orange cows, green stars, blue clovers. I don't know what the hell's in those pictures. I never could do that, by the way. That's how I want you to look at the chart now. I want you to look at the chart with a different eye, a different set of beliefs and understandings. And I want you to blink, and all of a sudden you see the M's, the W's, the flying saucer market makers, the dinosaurs eating your stops. Understand? When you look at it with what I'm showing you, and it clicks, it's game over for you in your trading business. You own it. I don't know how long it's going to take you to look inside the 3D art and for it to change. Everyone's different. I still can't see 3D art. I don't want that to happen to you. I want you to be the starfish that I threw back. I want you to be the person that gets this and has success in your life. You all deserve it. Okay, it's 10:43. I'm going to end here. It's a good spot. I'm sorry if you're tired. I went a little longer than I like to go. I usually try to break around 10:30. Homework for tomorrow, my friends. You didn't want to hear it, but here it is. I want you to go back, and I want you to mark the charts. I want you to do Euro USD and GBP USD. And I want you to write on the chart everything I taught you today. You new guys do it. Old guys don't do it because I'm gonna be slammed. I will look at all the emails tonight or tomorrow before class. Let me get a little white piece of paper over here. Let's see. Let's see. White screen, white. Okay. Here we go. I need my pen. Euro USD. GBP USD. Go back as far as you want. I don't care. Go back a month, go back 2 months, whatever. Okay, now, I want you to label everything that I talked about on the chart. I don't know if I spell that right. All right, let me review for you because you're probably like, what the hell did you talk about? I'm confused. All right, I want you to label. I'm going to make a little list. Vector candles, 3 swipes at the high or low, W's, M's, 3 levels of rise, 3 levels of fall. I want you to label end the day and consolidation. I basically want you to find this on every chart that you can. 1, 2, 3 to the high, pull back, hit it again, 1, 2, 3, W, reverse, end the day. I want you to label this. I want you to note the pins, the timings, the hammers, orange hearts, blue stars. I want you to label everything I talked about for the last 4 hours. Okay? Remember my email address? It's in the beginning of the slide. steve@mmmforex.com. I'm going to go through as many as I can. It's going to be a lot, but I'm going to get through them. I always do, I promise. And I'm going to take 2 or 3 of the outstanding ones, and I'm going to post them tomorrow for our review. We'll talk about it at the opening of the session. Okay? Any questions pertaining to today's information and homework that I can help with right now? Zen and Kim have been answering and typing in there, helping out with the questions. That's fine. Nice to see you, Lou. Can I type my email address? I can't type it because it won't type on the screen, but I can try to write it. Let's see. It's my name, Steve. Wait, let me toggle this and clean it up. Start over. All right, shit, it won't toggle. All right. STEV. See, you should have wrote that down. I told you to take notes. Steve at Forex. Forex. .com. I have another email address coming. I'm just too lazy to set it up on my Outlook. Sorry. Take a snapshot. Use Jing. Use screen capture tool. Lou, don't do it, man. Don't send me any charts, buddy. Okay, look. All the new guys only. Take a screenshot of your chart. Mark it up. Use Paint. Take a screenshot of the chart, use Paint, mark it up. Vector candles, breakouts of the box, stop hunt low. Hey Lauren, how you doing? Stop hunt low, stop hunt high, 3-level drop, reverse pins, mini consolidation zones within the range, within the end of each drop. All the stuff I just talked about. I want to see if you learned anything or you just sat here like a vegetable for 4 hours. 5 hours, sorry. Okay? Kelly, thank you. Lou, thanks. You're a ball buster. 15-minute chart. Yes, Whitney. Everett, thank you. Thank you, Veda. I'm glad you're here. Ed, thanks. Nice to see you, buddy. Thanks, David. Nice swing trading there, buddy. I've seen him in the forum. Great. Thank you, guys. This is good stuff, man. I love teaching it as much as I hope you love learning it. It's awesome. Peter, how you doing? Bruno, Tony T from Florida, hope you're doing okay. Subio, nice to see you, buddy. Quit smoking, man. I'm going to quit Diet Coke, you quit smoking. Joe, nice to see you, buddy. I'm out of chocolate and I'm running low on coffee. Thanks, guys. Thank you, John. Thanks, everybody. All right, listen, I'm going to end it here. Have a great night. I'll rest my voice. I promise I'll be just as jacked up tomorrow. Leah, nice to see you. Alan. I'll see everybody tomorrow. Listen, get some rest. Don't trade live money unless you're a Subio. He's the only one allowed. Seriously, new guys, don't trade live money. If you're up and you want to look at the market, open a chart, take all the shit off of there, and just watch them work. Open your mind and watch them work. Don't put any money on the line because it'll mess up your mentality. Just watch them work. Okay? I know you guys are going to do it. You don't listen. So anyway, good night. Good night, good night, good night. Kim, nice to see you. Thank you. Okay, good night.